Let's start with the good news, and that would be the China numbers. So, according to AJ, who goes again, you have to, if you want to follow him on X, you need to write this down. ALOJOH is his handle. He says that Tesla China reports 13,200 vehicles delivered for the week of the 20th to the 26th of May. And that's a good result, and it closes the gap a bit more, continues to reduce the gap for 3 weeks in a row. This means that Tesla is now only 7,600 or 3.6% behind last year at this time. 210,000 versus last year, 217,000. Now, I would say to AJ at this point, he should also have a little quick paragraph saying, being even with last year is not the goal. We're really looking for Tesla to be well ahead of last year's numbers. Now, I've always said for China, I mean, even in my most positive days, I've often said that I don't expect Shanghai to be ahead for the year more than maybe 100 or 200,000. That would be a really good get for Shanghai because they were already pretty much at very, very high levels of factory output. And with no new capacity, that would be a lot. So I would be excited to see about 100,000 improvement over last year out of Shanghai. AJ goes on to say, this is further evidence refuting the bear thesis of Tesla's China sales weakening, and that would be true because what we're looking there is at actual China purchases. I was also hoping and looking for the export business to improve and pick up some of any softness in China will be picked up by the export markets because they're not only have existing export markets, but they're adding new export markets. And last year, there was some brand new ones that were added that should be improving and increasing this year. He says a decrease of just 3.6% over a 21-week period is rather strong performance given the barrage of new vehicle launches in China supported by major marketing campaigns. He also says that Tesla sold a record 5.4 refreshed Model 3s in China in the most recent week based on new vehicle insurance registration data. And I saw elsewhere that that is definitely, he said it's a record. So this is the one I've been watching because that's what I'd really like to see is the Model 3s really taking their rightful place. This is an outstanding automobile, very well priced, and should be doing very well in Europe as well as in China. Okay, I do believe right now that we are seeing a shift, a substantial shift of investment out of Tesla into Nvidia. This morning, Nvidia is up $47. Now, this is what I'm last looking, $47 or about 4.47%. That is a massive increase in Nvidia's share price after the big run-up they've already had, and they are now approaching Apple, could pass Apple as the number 2 most valuable company in the world. Tesla's down in that same market by 2.2% the last time I checked, although it is headed up from where it was earlier, down around 3%. This market would be down. The Dow is down, and the NASDAQ is basically at lunch, as we now say on this channel, is virtually unchanged. If it wasn't for Nvidia, the NASDAQ would be down as well, and S&P. So what do you think about my thesis? Is there some money moving out of Tesla and into Nvidia? This would be people that would be selling low in order to buy high. It's not my investment thesis. I don't recommend it, but even that's not investment advice, I think. Anyway, buying low and selling high is kind of the foundational premise of what people should do in any asset decision that they're making. If it's an investment, you could buy high if you love a piece of art and you don't care that you're ever going to sell it, that's okay. But if you're buying stocks or you're buying bonds or you're buying commodities or a house or anything else that you think of as an asset that you might sell at a later time and desire to have a profit, it's always better to buy low and sell. Am I saying anything that's just too obvious? Because I think it could be said over and over again when you see what I believe is this transfer of funds out of some Dow stocks, out of some other NASDAQ stocks, S&P stocks into Nvidia, while it's sitting at these massive increases this is not usually the best time to get in. Now, you might be able to get in and ride it, as this morning you could have a 4% increase and then jump back off the ship again, unless you really think it's going to go massively higher. And it might. I'm not even saying it won't. It could go higher. There's absolutely fundamental reasons and technical reasons why it could go much higher from here, and that could be a great play. But right now, the risk-reward ratio on Nvidia, in terms of going up compared to the risk-reward ratios that I see on Tesla, in its ability to go up possibly 10 times. Do you think Nvidia has any chance of going up 10 times from here? I don't. Do you think that Tesla has a chance of going up 10 times from here? I absolutely do. And I think that we'll know for absolute certain within the next 12 months. If we get to next May and Tesla has not got a robotaxi, it doesn't have robotaxis on the road, FSD fully figured out, and Optimus being unveiled clearly as something that is saleable, with a price or a leasing amount. If all those things don't happen by May of next year, maybe I should take the channel down. So we'll see. But I think the next 12 months we'll see all of those things happen. And if they do, Tesla is obviously going to be at a much, much higher place than it is today. All right. Well, at least one market pundit thinks that Tesla's down this morning because proxy advisor firm Glass Lewis has recommended against Elon's pay package. Gary Black points out that they took that same position in 2018, and the vote turned out to be 70% in favor, even though Glass Lewis was against. I'm not at all sure that that's the reason for Tesla's softness this morning, although there's precious little positive news on Tesla to offset this negative other than the China numbers I just gave you. So this could be a knee-jerk reaction, as this Glass Lewis decision is being widely reported. We are also, good news would be we are seeing some amazing videos out this morning about actually over the weekend, about the parking capabilities of Tesla's new FSD releases. We haven't had a chance. Not sure that we have the right release yet to do that, but we're really ready to give these parking opportunities a try. They look very, very interesting. Unlike other parking efforts that other cars have been able to do in the past, in this case, there is you drive into a parking lot and it shows you the empty parking possibilities. You push the one that you like and it just takes you there and parks. It's pretty fun. Anyway, I'm going to be watching more of this and reporting more on this in the future. Some are also reporting that there's a surge in production of both the Cybertruck and the Model 3 in the US. This is where the real opportunity for sales improvement for Tesla in 2024 still remains. Let me say that again. The year is far from over. This is May. Tesla could ramp up production of Model 3s, ramp up Model Ys in Texas. Definitely the Cybertruck has got a long way to go in terms of getting up to the full ramp for the Cybertruck. So the opportunity that I saw at the very beginning of the year is that Berlin and Texas plus the Model 3 could give us that 100, 200,000, plus Cybertruck could give us 100,000, 200,000 improvement over last year's numbers. Last time I checked, Elon still says that the second quarter will be better than the first quarter, which it certainly appears it will be, and that there's still half a year to go. That's me talking, that we could still hit some decent numbers this year, and that would shock the market and could increase the sales, the stock price as well. This is Randy Kirk. If you would like to hit the like button, that would be really something I would like. So please do that. Hit subscribe, notify. Okay. Wow. This is going to be a week. Holy mackerel. The Brian White video I did yesterday, you got to see that one. Brian Wang this morning is going to be out in a couple of hours, 3 hours. We're going to do a video that's going to be talking all about what in the world is going on in the AI, AGI world, what it takes in terms of computer capability to do that, why there's this massive race between them, virtually everybody, the Mag 7, including Tesla and Tesla's, Elon's other company, X.AI, to be number one in compute. And eventually, maybe it's also a race to the top in terms of storage. So we'll see. Anyway, Brian did a phenomenal job. Oh my gosh, this guy's a brainiac. As you know, you want to watch that video later this morning. So hit notify for that. And then if you think I'm doing okay, if you think I'm doing a reasonably good job of bringing you content that's useful, could you, think about doing the tip down there? Hit the tip jar down on Patreon. Just go down into the description below and hit the link, and then that takes you to Patreon, and boom, it's really easy to sign up. And if you sign up at the $10 level, you can get 2 audiobooks, or you can get a free Cybertruck bottle opener. It's almost season. We're getting close to Christmas. We've got to start thinking about those Cybertruck bottle openers for your Christmas presents coming up next year. All right. The yield curve got another hot mention today. All of a sudden, the yield curve is folks are talking about it again. This was in the Wall Street Journal, but it was mostly to point out that as a predictor, it might be broken, and that you can't really count on one data point or data service or kind of system in order to predict a recession in a complex environment like the world economy or the U.S. economy. That anyway, we're now 23 months in a row of having the yield curve inverted heavily. Not just inverted a little, no, we're talking about really seriously inverted. And in fact, it doesn't mention in this article that the yield curve has been getting more inverted over the last couple of weeks rather than less inverted, which it had been trending down, and now it's trending back up again. Anyway, interesting article in the Wall Street Journal. Saying that the longest the yield curve has ever gone inverted was 24 months before a recession started. We're now at 23 months. So what is going to happen? And if you looked at my video, I think that was last night, I do talk about the possibility. I think we're looking, I still continue, I need some data points this week. I'm still sitting at 30-70 recession potential for third quarter. I might switch that to 40-60, depending on a couple of the data points coming up this week, in particular, the GDP revision and also the PCE numbers that are coming on Friday. Larry Goldberg is often referred to he has often referred to the fact that we are missing population in the workforce, and that therefore he doesn't trust the government numbers to be giving us a full story on what's happening in terms of the labor market. So, we have 10 million available jobs with way less than that. I forget what it is at this point in my head. It's just gone out of my head. But we got 10 million available jobs that are not filled. Actually, I think it's down to maybe 8.8 now. It was 10. Anyway, there's a book out that's called Men Without Work. It's the second edition. First edition was published in 2016. Well, the trend of men without work is increasing, and now women without work is being added to the numbers. So you now have 7 million men, working age men between, I think, 25 and 55, working age, prime years of working between 25 and 55, 7 million men, and now 3 million women have joined those 7 million men, making a total of 10 million folks that are basically taking pain pills and watching screens. That's what over 50% of the people, when according to statistics, are spending 40 hours or more on screens during the week that are part of this cadre. And over 50% of them are saying that they're home taking pain pills. So this is a number that has been increasing. Both numbers, especially the women, has been increasing since COVID, and the men also increased since COVID. They just didn't go back. And the author, thinks that this is a really bad signal, a really bad sign, and something that needs to be watched that nobody but him is talking about. This morning, the S&P CoreLogic Case-Shiller 20-city housing price index rose 0.3% in March compared to the previous month. Home prices in the 20 major U.S. metro markets were up 7.4% in the last 12 months, ending in March. Economist survey by Dow Jones had predicted it would be up 7.3, so the number was very close to exact. A broader measure of home prices, the national index rose 0.3% in March also, and was up 6.5% over the past year. All of these numbers are seasonally adjusted. The 20-city and the national index are both at all-time highs. I know that doesn't shock you at all. A key detail, San Diego posted the biggest year-over-year home price gains, prices up 11.1%. I guess San Diego is the new place to go. All 20 major markets reported yearly gains. Did you hear that? All 20 reported yearly gains, all 20 that they follow. So where are the markets now? Let's take a quick look. Let's see where Tesla is first. Tesla is now down 3.36%, or I'm sorry, down $3.36, which is only 1.87%, which is a great improvement over where it was earlier. We have got the Dow, which would suggest that my knee-jerk theory is correct, and that people are now looking at the Case-Shiller number and going, that's a nothing burger. The Dow Jones is now down. Oh, darn it. The Dow is now down 132. The NASDAQ up 69. That's a big improvement. S&P up 2.54. Apple and the rest of the Magnificent Seven is mixed. So you got Apple, Google, and Amazon up, Meta and Microsoft down, and of course, Nvidia up now $52 this morning at 1,116. And that is even down a little bit from as high as it was earlier today. Let's look at the percentages for you all. The percentages would be the Dow is down 0.35%, NASDAQ up 0.4% because of Nvidia, basically. And the S&P also, Nvidia, helping it to be up 0.02%, Tesla down 1.9%. The Cathie Woods are absolutely red, green, red, green, red, green. It's really funny to look at. Oh, there, I'll give you a look. See how that's funny? Anyway, a total mix on the Cathie Woods. Let's go find out what's happening with the bond market. Last time I checked, there was not much movement. Let's see. Let's look here. We have got, oh boy, bonds, the 10-year up 1.8% at 4.491. We have got the 2-year down. So that is a closing of the inversion. Maybe these articles are starting to impact. The 2-month is down 1/10 of 1 basis point. So basically the 2-year and the 2-month are unchanged, but the 10-year is up 1.8 basis points. Yeah, so some closing of the inversion. All right, let's go on to oil. We have got the oils. Hello. We have got oil up 1.67, which is 2.15% at 79.4. So Texas Intermediate still under 80, but trending higher the last couple of days. Brent also up, less up at $83.75. Natural gas actually down this morning. It had been up in the pre-market. It's still sitting at 2.516. You've got the gold up strongly, 18 bucks up at 2,353. Silver up 4.81% at 4.76 now at $31.95. Copper is up also 1.73% at 4.836, but still under 4.5 where it had broken through last week. You've got the dollar edging down a bit in anticipation, I guess, of good reads from the PCE later this week. I think we already, anyway, we'll talk about the PCE on another time. Okay, we have got crypto down, Bitcoin down 1.699 at 67,887, right in the middle of the trading range recently. And that would be pretty much the market as it stands right now. We'll take a quick look back at Tesla just to see if there's been any movement since we looked a minute ago. No, basically right where it was. All right, so a couple of last minute thoughts here. Very informative video with Brian yesterday on the competition in the United States. We talked about General Motors and Ford and NVIDIA and Lucid and Rivian and all of these guys. And then we went over to China. We talked about those guys. We talked about all the German car makers. We talked about South Korea. We talked about all the competitors. It's a little bit of a longer show, but it is very useful if you care at all. And hey, listen, the competition matters. they're needed in order to get us to sustainability. But on the other side of the coin, the competition is now becoming an actual issue to pay attention to. Okay. Before I would always say, well, it doesn't really matter at this point because the TAM is huge, and Tesla can sell every car they can make. Well, that's clearly not true anymore. So now it is time to pay some attention to what the competitive advantages would be of a Mercedes. What are the competitive advantages of the Ford Lightning compared to the Cybertruck, et cetera? At this time in the transition to BEVs, now is the time to actually look at that competition and ask, what are they doing and what is Tesla doing in order to fight off that competition? Quite frankly, this is the time when Tesla should be doing massive advertising, but they've got a different plan, and I think it has something to do with robotaxi and robots. Anyway, later today, as I mentioned before, oh, by the way, the card for that Larry White, Brian White video will be right here. But then later today, you must hit notify because this Brian Wang video, absolute must see. It is the most important video that he and I have ever done together. Because why? Because AI and AGI is the most important subject on everybody's mind right now in the markets, but also outside the markets. It is by far the most important thing taking place. Because why? Because robots, two-legged robots, humanoid robots, are by far the most important thing that's going to happen in our lifetimes. And it's going to start happening next year. And it needs AI and eventually AGI to be as successful as possible. So hit the notify button for that and then go down. Come on now, it's Patreon time. You guys can do it, please. All right. It's been great talking to you.